Yo, what is going on, everybody? It is Mateen Tukhi here, back with another video. Hope you guys are all well. Welcome back to Masterclass Day 8. Days are flying by. This is actually going to be one of the only lessons that I'm going to make available to the public for the Masterclass on YouTube. So if you're watching this video on YouTube, you don't know what the Masterclass is. Pretty much I am hosting a 5-week masterclass where Monday through Friday I provide new educational lessons every single day. Every single day as well, I'm doing pre-market review, sharing my game plan and sharing my analysis going on into that day. And we also do live trading and much more. So if you are interested in joining the masterclass for this month, 5-week masterclass, like I mentioned, you want to see more information about it, go ahead and click that link in the description to secure your spot. But for today's lesson, I'm very excited, just like how I am for all of the other lessons, but we are going to be covering supply and demand zones, how exactly supply and demand zone creations, how to exactly create our supply and demand zones and find and plot out the best zones possible on the charts, obviously, right? Because we want to make sure that we have our key levels down as best as possible. And also, if we want to trade off these supply and demand zones, we want to make sure that they are drawn out and as accurate as best as possible. So I'm going to share pretty much everything that I do and that I look for when it comes to drawing out my zones. Share some tips with you guys, and let's go ahead and hop right on into it. Of course, if you haven't watched the previous masterclass lessons, we're on day 8 by now. So if you haven't watched the previous lessons, go ahead and give them a watch, because all of the videos are complete gems, and we're pretty much covering everything. So let's go ahead and hop right on into it. Let me go ahead, share the charts with you guys. Okay, perfect. So what just happened? Okay, cool. So typically when it comes to creating my supply and demand zones, let me do this a little bit. So when it comes to creating my supply and demand zones, the main thing that I look for, step 1, is I look for a base within price and a large move to the upside, right? And that's typically what creates our demand zones, is some type of base creating and then an explosive move to the upside, or an explosive reversal to the downside. So that's typically what I look for demand zones. And then same thing for supply zones. I look for when a key high is created, and then we see some type of strong move to the downside, indicating supply being created or a large amounts of sellers being inputted within the market, right? So that's what I look for in terms of my zones. Now, when it comes to actually drawing my zones out, I will either start on the 5-minute or the 30-minute. So for example, I'm just going to be on SPY for today because it's what I trade most. Let's start out on the 5-minute. So now that I'm here on the 5-minute, let me go ahead and make this a little bit easier to see. So now that we are on the 5-minute, let me go to right about, let's right about here looks good. So now that we are on the 5-minute, like I mentioned, we want to look for some type of base within price and then a large move to the upside, or a large reversal to the upside. That's obviously what creates demand. So let's start with our demand zones first. So we can obviously see price trading here. Keep in mind, I'm starting out on the 5-minute time frame. Like I mentioned, I'll either start out on the 5-minute or the 30-minute. But we're actually going to do all three, so stay tuned. But as we can see here, we see price moving to the downside, and we see a bit of a base or a bit of a low being created within price, and then a reversal and then a push to the upside, a strong push here. We can also see something very similar right here, a base, a low created within price, and then a push to the upside. But initially we can see that this base right here and this push to the upside looks the strongest, right? So Now, what I want to do is on the 5-minute time frame, I'm going to draw the zones out a little bit different on each time frame. So keep this in mind. So on the 5-minute time frame for the demand zone, we want to mark out the bottom wick of that base candle, or the bottom wick of the candle that started the move to the upside, which is this black candle right here, which obviously started the move to the upside. So we want to get our box out, or our rectangle, and we want to go ahead and mark out the bottom wick of this candle, of the base candle, and then completely just extend it out. Now that we have it extended out, we now have a 5-minute demand zone created. Now you can already see, going into this 5-minute demand zone, you can see we have multiple different reversals, multiple different scenarios in which price came and tapped into our demand zone, respected it, and pushed back up from, right? It was treated as a support level. It was treated as an area of buying interest. So now that we have our 5-minute demand zone created, obviously, yes, that's good enough for us, but typically for me, I always want to go extra and get that extra confirmation, right? So now that we are on the 5-minute, what I'll do is I'll either switch to the 30-minute. So let's go ahead and switch to the 30-minute, and we have our zone here. Now what I want to do is I want to make sure that the 30-minute is matching up with the 5-minute demand zone that I drew out. Now in this case scenario, you can see the 30-minute pretty much looks very similar to the 5-minute. You can see we had a base within price and then a large push to the upside, right? So pretty much on the 30-minute, I would pretty much do the exact same thing. I would mark out the bottom wick of this candle, of the 30-minute candle. So let's go ahead and mark that out, just how we did for our demand. Keep in mind, we are only marking out the wick, the bottom wick of this candle. Now this is for the demand. We're only going to be marking out the bottom wick for the demand. If it was supply, we would mark out the top wick. But for now, let's focus on demand. So now that we have this matched up, like I mentioned, now that we have the 5 and the 30-minute demand zones matched with each other. Now, since they're matched with each other, that should give you even more confirmation within that zone, more confirmation within that area, because it's really showing you that that is an area that has been heavily respected and heavily pushed up from buyers, right? So obviously we have that area drawn out, and we have both demand zones matched out on multiple different time frames. Now, since we have that, if you really want to go overboard, let's switch to the 1-minute, because typically I'm drawing my zones out on the 5 and the 30, and I'm trading on the 1-minute mostly. So let's see, where were we here? Okay, should be somewhere over here. Oh wow, it's really hitting us with this. Okay, I can't believe TradingView just hit me with that. I need to make sure I change that for next lesson. Okay, let's switch back to the 5-minute. Okay, so now that we are here on the 5-minute, we have our 5 and our 30-minute zone matched up. Now you can see on our first retracement into this zone, price heavily respected it and got pushed to the upside. So you can see how well this demand zone was treated. Now obviously, if you were to take the trade off the demand zone, you would target your previous highs, which in this case scenario would be this key high right here, this resistance up here, in which you could use for a take profit. So you can mark this take profit out, or you can mark out this take profit out as well, which is the pre-market highs. And then you can obviously see both take profits got smashed through beautifully, this key high and then this key high as well, both got tapped into, and it would have been a beautiful demand trade. You can obviously see here this retracement and then this retracement as well, especially this one. You guys can see how powerful this one led to. Excessive buyers then pushing price up excessively from that demand zone, hitting both of our key profit, our take profits. And our take profits, guys, are always going to be key levels, right? They're always going to be key levels. So like I mentioned, we have these two resistance areas right here. Boom, boom, both got hit perfectly. Both executed perfectly, and that would have been a beautiful trade. So that's that. So Let's do one more example for a demand zone, and then we'll switch over and focus on supply. So like I mentioned, we want to look for some type of base within price, and then a push to the upside or some type of reversal to the upside. So let's see what we can do here. Okay. Let's see. And I wanted to make sure that I drew these zones out live for you guys and didn't just have them like already prepped out, so you guys can see my thought process of why I'm actually drawing these zones and like what I'm looking for. So bear with me here. Let's look for the best zones possible. And there are obviously scenarios where your supply and demand zones aren't always going to work 100% of the time, right? Like, for example, you can see something right here. Like, you have a base within price and then a large push to the upside showing strong buyers. Like, if you were to mark out this area as demand, you obviously see price tapped into this demand zone. It showed slight buying activity, but sellers just were initially stronger, right? So obviously your supply and demand zones aren't going to work 100% of the time, but obviously that's why I've made a separate video on how you can, best understand different stuff like that and best understand confirmations within those zones. So there's that. And then, okay, so it looks like we have something forming here. So you guys can clearly see here, we have a bit of a support, a bit of base, some lows being created here, and then strong push to the upside, right? So let's go ahead and mark this out. We have this base within price being created, or you can even mark out this one. So let's go ahead and mark out this right here. We can obviously see here, we have a base within price, a strong low being created, and then a strong push to the upside. Pretty much same thing here. Consistently, we had a base being created and strong push to the upside, base being created and strong push to the upside. And each time that base was being created, you can see the base was created inside of this demand area, right? Heavily respected that demand area and heavily, it never failed to break below. You can obviously see here it came close. Price came close to breaking through, but initially those buyers didn't want to give up that level, and that's what gave us that strong push to the upside. So let me go ahead and get rid of these ugly circles here, but you can obviously see we have our 5-minute demand zone being created. So now let's go ahead and draw out, or let's go ahead and switch to 30-minute. And let's see if we can match out the 30-minute zone with our 5-minute zone to really give us that extra confirmation. So I believe it's right here. Yes, it's right here. So you guys can see perfectly that the 30-minute matches up perfectly with the 5. You can see it's pretty much the same exact thing. Base within price being created. And you can see it pretty much looks the exact same on 30-minute. So let's go ahead and mark it out here. Looks like you could do this base or this right here. Pretty much the exact same. And then extend that baby out. Or you can do this base right here and then extend that out a little because you want to do the whole wick. And then you can give yourself some room to breathe. So now we have our 5-minute demand zone mixed with the 30-minute demand zone. So now that we have two demand zones mixed with each other already, like I mentioned earlier, that should give us double stronger confirmation. Now let's go ahead and switch to the 1 minute. Hopefully TradingView doesn't hit me with that BS that it did from earlier. Okay. Should be right here. Perfect. So now that we have our 5-minute and 30-minute matched with each other, we want to go ahead and match our 1 minute now. Really give us that extra confirmation. So now what I do for the 1 minute, I do a little bit differently. So pretty much the way that I do the 1 minute is I actually mark out the whole candle that started the move. So we're pretty much still marking out that base candle that started the move to the upside, but I'm marking out the whole candle instead of the wicks, right? So let's go ahead and see here. We can mark out, let's go ahead and extend it out so we can see a little bit better. So we can obviously see a base within price right here. Oh my God, what just happened? Why does TradingView keep doing this to us, guys? What the hell? Five minute, 1 minute. Okay. Now that we're here on the 1 minute, TradingView, don't screw us over again now. Like I mentioned, we want to mark out that base candle before we had that large push to the upside, which you can see right here, base candle before that large push to the upside. And you can see we had the base candle being created and the large push to the upside being presented inside of our 5 and 30 minute demand, right? You can see each time price bounced into this demand, it tapped right into our 5/30 minute demand zone areas, heavily respected it, and had a push up, indicating strong buying coming from that demand. That is why we are marking out these demand zones, because this demand indicates strong buying, strong excessive buying orders being inputted within the market. So let's go ahead and mark this out. Rectangle, base candle, extend. And now we have 3 zones, which is like the max confirmation we could get, you know? And then we have our 5 minute zone, 30 minute zone, and 1 minute zone. Now you can obviously see, now we just want to simply look for a retracement inside of our 1 minute zone. Our 1 minute zone is obviously matched within our 5 and our 30 minute, but we typically want to use the 1 minute. We want to look for a retracement into the 1 minute for our entries, right? We can still use the 5 and the 30 minute, but typically we want to use the 1 minute for our entries. And then our 5 and our 30 minute are more for expecting a reversal from that price area, if that makes sense. So obviously we got, let's go ahead and change the a color of the 1 minute so you guys can see exactly what I mean. We tapped right into this 1 minute right here, heavily respected it. If you were to take a trade, so let's say I'm taking this trade. What I'm doing, you can target these highs up here. So let's go ahead and mark out these highs. Your stop loss would only be a break outside of the demand zone, right? So you're risking very little already. You're literally risking like 10 to 15 cents on this trade. And then obviously you can see price heavily respects this zone, pushes up from this zone, buyers step in like crazy from this demand zone, and price goes absolutely diabolical from that demand. You guys can see how well that area worked just by getting that extra confirmation that we needed. So there's that. So that's going to be demand. Let's go ahead and move on over to our supply. Pretty much going to be the same exact thing, but it's going to be vice versa. We are looking for selling pressure. We're looking for excessive selling orders being presented within the market to mark those areas out, and that is obviously what also creates supply. So now we want to look for some type of key high being created and then a push to the downside. So let's go ahead and go over here. Okay. So we can see this is in pre-market, I believe, too. Yeah, it is. But we can do 2 different examples. We can see that we have a key high, right, or a high being created within price, and then we have a strong push to the downside, indicating strong selling pressure. So now, since we're on the 5 minute, we're starting on the 5. Let's go ahead and get our rectangle out. We're going to mark out the wick since we're on the 5 minute, and mark out the top of the wick. We're going to mark out the top of the wick since we're doing supply, and then extend it out. And then you can obviously see now we're on the 5 minute. Let's switch over to the 30 minute. Same thing right here. 30 minute matches up perfectly with our supply. So let's go ahead and draw out our 30 minute zone. Boom, boom. And then if you want, you can switch over to the 1 minute. And then like I said, the 5 and the 30 minute is more for like expecting a price area reversal. and the 1 minute is more for our entries. Where is that supply? What the hell? It just disappeared on us. Okay. Okay, perfect. It's right here. So now that we have our supply areas drawn out, let's extend this out. We have our 5 and our 30 minute. Now we have that double confirmation that we're looking for. Obviously, if we were taking a trade off of this, our stop loss is simply just a break above this supply zone. We see our supply is obviously being created right here. So initially we want to look for a retracement inside of the supply zone, in which we exactly did. We heavily respected the supply zone, and then that's when we started to get this push to the downside from this supply area. You can see how strong of a push we had as well from the downside from that supply area that was created on our 5 and our 30 minute time frame. I apologize for the trading view issues as well. I'll make sure that is fixed for the next video moving forward, but I typically don't have their, only reason I don't have their membership is because the only main benefits is like 10 indicators, and I don't even use indicators. This is literally the only stuff that I use. This is how simple my trading is, and that's also why I love supply and demand so much and preach it so much. It's so simple, you know. You don't have to overcomplicate it. You don't have to have a bunch of bullshit on your screen. It's very simple, and it's simply just the fundamentals of the market. It's simply how the market moves. So there's that. So let's go over here, and then let's mark out something like this. This is going to be in pre-market as well. Okay, let's go over on to today. This is pre-market leading on into pre-market. Let's kind of zoom out. Once we zoom out, we also get a lot better of an overview as well. Look, it looks like we're kind of getting a better view here. So we see this here. This is perfect. So we see a high, a key high being created within price, and then a strong push to the downside, right? So what we want to do is we simply want to mark out this key high, mark out this push to the downside. Now, since these wicks are very tight, very literally for probably like a couple cents, let's go ahead and just make it a little bit wider, mark it a little bit into the candle, just so we have a bit more room for price to breathe inside of our supply zone. Now, it looks like we got a retracement into here. So if we want, we can mark it down a bit more, and that would make a bit more sense. We could also mark out the whole 5-minute candle, but realistically, I don't like to make my zones so wide, because when they are super wide, it gives me less decision making to make within that zone, because I don't know where exactly to enter, and if I were to enter inside that zone, my risk would be a lot. It would be very. I'd be leaving a lot of risk on the table, if that makes sense. Because like I've been mentioning, my stop losses when I'm trading with supply and demand are either a break above supply or a break below demand. So let's say I'm entering right about here inside of supply, but my stop loss is up here, right? So that means that my stop loss is just simply going to be a lot larger, in which I don't want, right? I want to make sure that my risk is a lot more minimized. So that's going to be that. So obviously we have our supply zone being created. Let me go ahead and do this. Boom, boom. Now that we have that, let's go ahead, switch to the 30-minute. Okay, now that we have our 30-minute time frame here, our 30-minute pretty much looks the exact same as the 5-minute. So let's go ahead and mark out our 30-minute zone now. Pretty much do the exact same on the 30-minute. Mark it a bit into the candle, and then just completely extend it out. So boom, we have our 30-minute now and our 5-minute now. Now, what we want to do is find that zone first, since it keeps disappearing on us. Perfect. Oh no, that wasn't it. I believe it was down here. Perfect. So now that we have this supply being created, very look at this. Like, just simply look at that. I'm not even going to explain. You guys can just see how well that supply worked and how well this level was respected and pushed to the downside once we obviously did get that retracement to this price area. Heavily respected this area multiple times, rejected this area multiple times, breaking above. You can see it wanted to break above, but initially those sellers did not want to give up this level. Sellers stepped in massively, and we had a very strong push to the downside. You guys can obviously see all the way from 520 down to 514. $6 move to the downside right off of this supply zone. Same thing right here too. You can see push into the supply zone. It looked like it was going to break the supply zone, but it never closed above. You want to wait for a whole candlestick close above that supply zone or a whole candlestick close below your demand zone, right? So you can obviously see how well that supply zone worked. And you can obviously see there were multiple other retracements. The supply was created right here. First retracement right here, we got a push to the downside. Price heavily respected this area. Same thing right here, pushed into our zone, heavily respected the area, pushed to the downside, obviously indicating strong amounts of sellers. And then same thing right here. We pretty much opened inside of this supply zone. Market opened and we opened inside the supply zone. You could have taken a trade right at market open and price would have absolutely tanked, and you could have caught an absolute beautiful trade and could have been done an hour, 30 minutes into the day. So that was a beautiful move off the supply, and there were various beautiful moves, right? It's not just one. You can see how well and how many times price actually respected and reversed from that supply area. So that's going to be that. Going to go ahead and wrap up the video here. Hopefully you guys found value from the video and learned something new. If you guys ever have any questions or anything in specific, feel free to leave them down in the comments below. Other than that, if you're not in the Tukhi Trading Discord, come and join the winning team. Link will be in the description. And if you are interested in joining the masterclass, link will be in the description as well. Other than that, family, much love. I'll see you guys in the next lesson. Have a great day.